led by Jonathan Wharton of Stevens Institute of Technology and Brigid D'Souza, formerly of Deloitte Tax LLP and founding member of Jersey City Schools Meetup. I hope you'll all stick around because these folks have been waiting for their moment in the sun, and what they'll have to say is going to be very interesting. So, thank you.
Good afternoon, everyone. I know that I was the last panel here, but we're very pleased to present a discussion here, at least about tax abatements. Brigid's been very influential in terms of what she's done online, and I'm grateful to be here on the panel this afternoon. I figured that I could just give at least an overview of some of my findings that I presented in Seattle at a conference of the American Political Science Association. It's kind of an old paper. It's a few years old during the Healy administration, but I think it would be very apropos for at least the Fulop administration. As many of you all know, my research interest is centered more around public policy and certainly economic development. Truth be told, I'm actually very supportive of tax abatements, but my findings at least led to some serious concerns related to at least some problems that take place here in Jersey City on a regular basis. Now, of course, mine is a little bit old, obviously, compared to her research, which is looking more to the Fulop administration, in the sense of what they've taken on in the last year or so in terms of categorizing all these abatements throughout a variety of different Jersey City communities. So I'm going to give at least kind of a few comments on what my paper kind of led towards, and at least have an understanding about what tax abatements are and what the purpose of them are for. As many of you all know, tax abatements are at least an initiative to help spur urban development, and certainly economic development in a lot of communities that might have been overlooked. It could be related to commercial, certainly residential development in this case. And Jersey City is not unique. I mean, obviously there are a lot of cities that engage in tax abatements where developers come in, make an agreement with the city, get reduced property taxes over a series of years. In many instances, it's usually 5 to 10 years. Obviously, in Jersey City, it tends to be double that in a lot of these projects. And in many instances, oftentimes developers will come back to the city and ask for an extension of that period, which is a serious concern, as you heard from previous professors on other panels, that it does have obviously implications related to city budgets. So, in this instance at least, what I discovered was that there are a number of different reports that point towards some of the concerns related to tax abatements. Some of the positive considerations to think about is that it does attract, obviously, higher income residents, and we certainly saw that here in downtown over the years. And really, Jersey City's been doing tax abatements since the early 90s, so it's been going on for a long time. Actually, go back to the 80s, if you want to go back to Newport, that's probably one of the better examples in terms of a case study. It draws on retail and commercial areas, provides new construction, and also redevelopment of blighted areas and communities and cities, and also construction-related jobs. Those are some of the positive considerations. Some of the negative considerations, which of course a lot of the media loves to focus on, certainly as a concern, it requires new infrastructure, sewage, roads, that kind of thing. City services, schools receive oftentimes little, if no revenue. There's oftentimes probable budgetary gaps, which certainly heard from Professor Pfeiffer earlier. There's oftentimes uncertainty of the tax abatement impact. What are the implications of these tax abatements, especially related to resources? And oftentimes, there's this concern surrounding close affiliations between city officials and developers. And you don't have to go too far back in Jersey history for that. You can go back to Operation Brigid, obviously, is a great example of that. But truth be told, I'm a supporter of tax abatements in the sense that I think that in many instances, a lot of communities are oftentimes overlooked in a number of different cities. And I think it's a good way to kind of spur a lot of development. My problem with it is oftentimes there are too many tax abatements being given out, and more importantly, there's a poor record keeping oftentimes taking place from one administration to the next administration. And there seems to be this kind of imbalance over the years of who's receiving these tax abatements and why. And why is it there's such a glut of them in maybe one area over others? So these are some of my findings after looking at several reports. I'm certain many of you all know this in the room, that over the years there's been the New Jersey Policy Perspective report, which took place back in 2009. The Office of the Mayor of Jersey City, under Healy, issued a response to that report as well, that same year, back in 2009. And then, of course, many people are familiar with the State Comptroller's report back in 2010 about the abatement benefits. And so I kind of outlined some of the concerns and problems and benefits between them in my conference paper. But here's essentially all my findings, and certainly examining all this, and then I'll take it on the bridge here. These are my top five concerns. The first one is tax abatements need to be monitored closely by the city, county, and state officials. Since New Jersey is required to approve city budgets like Jersey cities, and the state should closely at least monitor and assess the operation of tax payments. Currently, the state does not have oversight authority to provide guidance regarding tax payments. Obviously, this is the reason for the state report back in 2009. In addition, since Hudson County has shared local services and tax agencies, some county monitoring might also be necessary. Another concern is one of the critical elements of tax payment oversight is to have a third party, or at the very least a nonpartisan group, assess the initiative. Obviously, we heard from Professor Lyons earlier that it would be helpful to maybe have the university helping out and maybe monitoring resources. This could be one of the things as well, maybe examining at least some of the related areas to tax payments. Having maybe a nonprofit think tank, advocacy group, university, or similar impartial third party can follow at least the financial and global trajectory of tax payments can be very useful, especially over the years. Well, New Jersey Policy's perspective to start, their report was rather controversial. I think there was some concern surrounding that, especially coming from the mayor's office. But the report's harsh assessments and brief examples at least grew concerns in responding immediately to at least the organization's assessment. Similarly, the New Jersey Department of Community Affairs hired Arthur Anderson to study the city's government and the report, and they found that at least the city did lack abatement planning and recommended tax abatement changes, or to do away with the tax abatements altogether. And then the third point is there must be some formal process recognizing the actual need of where tax abatements should take place. And of course, the Fulop administration said that they're taking this on by having, obviously, we're just going to be offering here this afternoon in different communities. So that's at least a start in some direction. But there's got to be at least a formal master plan. And this should be devised at least related to areas of greatest urban development and where the need is really necessary. Oftentimes, planning boards, certainly city councils, determine abatements on a limited amount of criteria, if any. And that's got to be brought up. What are they actually looking at in terms of what's necessary for tax abatements? A set of criteria or assessment must be devised, not only provide at least evaluation consistency, which is a concern of mine, but also to avoid the public perception that Jersey city officials are giving special treatment to preferred or favored builders or developers. By formally at least establishing a set of criteria reinforcing standards as well as creating a formal master abatement plan, which should be reviewed, by the way, regularly. It shouldn't be just that it's done, move on. It should be done regularly. City leaders should officially define in clearly measurable terms what constitutes blight or rehabilitation for tax abatement purposes. Moreover, city officials should limit their across-the-board abatement policy and recognize the need to be selective about abatements. The fourth point is include education and county expenses as part of the pilot payment in lieu of taxes and yearly abatement costs. In light of, and we heard this again from all these professors, certainly and experts here today. In light of New Jersey state government decreasing education expenses significantly over the years, the one source municipalities can rely on obviously is property taxes. And of course, excluding school district funding and tax payments and pilots, it not only shortchanges at least public schools, but it also affects state financing for schools. As the state government covers almost 85% of the district's budget here in the city taxes are less than 8%, and the rest through federal resources. So the City Council attempts to pass an ordinance at least to require a portion of tax payment and pilot money going towards a city's school budget, but the measure was defeated back in 2009. And so this should be at least brought up for consideration again. And finally, my final point here was that pilot tax payments are at least imperative for municipal budgeting. The State Comptroller suggests that pilot collection should be split along the same distribution lines and percentages as normal tax collections, and not be just used to plug municipal budgetary holes. Again, you heard that from the experts over and over again. All these reports indicated that budgeting, at least in the future, you can't just continue to use, at least, these payments to help deal with that. So I would argue that you can't just eliminate, all tax payments. I think that's problematic. I'm certainly an advocate of it. I think the tax payments are very useful in a lot of cities. I'm more or less concerned about how oftentimes there's a lack of monitoring them. Oftentimes, many people know it's very difficult to track the paperwork behind a lot of them. We oftentimes don't know where they are located over the years. There's got to be a better system in play behind this. So, and God knows we've seen this over the years with each administration. I'm not pointing fingers at exactly one administration. I think it's across the board. So I hope that we can get into some good discussion about that. Thank you.
Thank you, Jonathan. I wanted to start out just by asking, just sort of an informal poll, how many people have heard the word pilot before? Okay, so good to most of you. And do you know, of those who have heard of it, you know what it stands for? Okay, so payment in lieu of taxes. Okay. Just to give you a little bit more background about me, I'm a stay-at-home mom, and my husband and I have 2 small kids, and 3 and 4 years old, and we are currently in the public school system with our older one, and we want the public schools, and we want to live in Jersey City long term. Before I left basically my employment, before I stayed at home with my children, was at Deloitte Tax, as Aaron mentioned, and I was actually in the field of international tax, doing a lot of sort of quantitative analysis and helping clients who were mostly multinational, corporations, helping them streamline their processes and basically helping them regulate with SEC requirements. So, I would often go into a client and I'd have to sort of understand sort of a broken process and help them fix that, and then create tools to kind of meet their regulatory obligations. And I found that when my husband and I really started thinking, can we live in Jersey City long term, the question about tax abatements became a much larger focus for us. And I started looking into it, and I have a blog called civicparent.org, and my approach was, I'm going to learn about this issue, and I'm just going to share it with my friends and neighbors and anyone else who's interested in it. And that's kind of what I've done, and I've written about, probably between 7 and 8 articles about tax abatements. And it's interesting, because it's funny to me that I'm even up here having only written about 7 or 8 articles, because I think that shows sort of the absence of, there hasn't been a tremendous amount of discussion about them. I mean, Jonathan Shirley, he's looked at it, I'm kind of a little bit humbled to be sitting up here with him, because he's done a lot more research into this. But I think that gives context to sort of the environment of abatements. And I like to think of abatements as a fiscal puzzle, okay? So you have to think about the fact that abatements have, you've got pieces like the rateable base, you've got tax rates, you have the city budget, you have education, as Jonathan mentioned, you have pilots versus taxes, and you have politics. And depending on your role in the community or your role in the government, you have a different perspective on each of these puzzles. And one thing I found in writing about these articles, when I write an article, I tend to go out and I try and meet as many people that might know about it as possible, and I try and synthesize various perspectives. And with abatements, what I'm finding is that many people have individual perspectives that give them a really valuable insight. So like Mia, she knows, Mia, Jonathan, there are certain people that know a lot about abatements just in terms of the history of the city and some of the math involved. City council members might have a certain perspective, the tax office. So that's kind of background about how I'm approaching this issue of tax abatements. I did have a slide presentation that's unfortunately not working, but one slide that I just want to speak to is it's a graphic, and the slides will be made available to everyone, but it shows all the abatements that have been granted throughout the city on the map. I'll just do that. I realize you probably can't see it, a lot of people, but abatements are all over the city. Okay, they've been granted sort of all over the city, various lengths and durations, 10 years, 20 years, 30 years, some are 40 years. And there are probably over 100 of them, just in, if you were to look at this map. So, and I'm going to need that back because I'm going to speak to additional slides. But thank you, please, that would be great if you could give it. So, and I included this slide really just to give perspective that this is a really important issue for all of us. A companion slide with that, which you don't need to see, is that we've gone from, in the early 1990s, tax abatements were about 3% of our city's revenue, okay? And now they're about 21% of our city's revenue. So we are, I'm sorry? Yeah, so if you think about all the revenues that the city collects to run the city, it's about $500 million. In the early 1990s, pilot payments comprised 3%. And now it's 21%. So we are becoming increasingly dependent on pilot revenues. Now, I just want to preface, this is all very complex. There's a lot of nuance, so it's important not to fall into the trap of sort of oversimplifying or making like sort of too many broad assumptions. I agree with Jonathan that abatements can be very useful tools. And the way I think about it is, if you think about a car that's standing still, when you shift it to first gear, there's a lot of motion and combustion that goes into getting that car from 0 miles to 10 miles. Okay, and then as you shift into second gear, and then third gear, and then fourth gear and fifth gear, each of those shifts requires a little bit less combustion, a little bit less gas. Okay, because by the time you're in fifth gear, you're sort of humming. A 30-year tax abatement is like first gear. Okay, it's like, you know, and I think the Newport example is a good example because you had those, you know, abandoned railroad yards, and granted it was waterfront property, so there's obviously a lot of intangible value, but there was, I believe, you know, chromium issues, and there's a lot that had to be dealt with. You know, so that's a downtown abatement that was given in the late 80s. You can debate the merits of it. But, you know, that's kind of a first gear sort of abatement, right? We want to get the city going. We want to get downtown going. You compare that with an abatement that was granted just a few weeks ago in Hamilton Park, 20 years, at 9th and Brunswick. And it's an interesting comparison because Hamilton Park is a very, you know, you could call it a gentrified neighborhood. It's a very beautiful neighborhood. The rents tend to be high. It's expensive to purchase a home there. So, you know, the question is, should we have used a fourth or fifth gear abatement in that neighborhood? You know, and by that, should we have given maybe a 5 to 10 year abatement? There are issues. So, for instance, the property in question at 9th and Brunswick, the exact address is 360 Brunswick Street, was an abandoned warehouse. So there might be environmental issues to take into account. There might be, so again, there's nuance to all of this, but I think it's a useful comparison of, you know, of how these abatements are leveraged. That I think, you know, we just need to consider in the conversation. I had a slide about abatement basics, and I think the only thing I want to point out is just, again, an important thing about pilots and abatements is that they really are there the real purpose of them, in my research, is to mitigate risk. Okay, so if you're a conventional taxpayer, okay, and you purchase a home, one of the things you want to know is, where are my tax rates going to be in 5 years, 10 years, 15 years, 20 years? So if you go into, like, for instance, a stable, small, suburban community that's already built up, okay, I grew up in Florham Park, New Jersey, which is in Morris County. That's sort of an established community. There's not a tremendous amount of growth happening there. There's a lot of business there. The rateable base is very steady and it's healthy. So there's little risk of moving into that community and seeing your tax rate sort of spike upward. But in Jersey City, we are a growing, dynamic city, right? There's a tremendous amount of growth that's occurred in the past 20 years alone, and there's still a lot of growth that can happen. So, you know, you could make the argument that it's a little bit more risky to purchase a home here because you want to, you know, there's not as much ability to predict where tax rates are going to be in 20 years or 30 years. A pilot is meant to mitigate that risk. So, for instance, when, you know, Lefrak went to build the Newport towers, you know, one of the incentives was Jersey City said, we're going to lock in your tax payments over the next 30 years. Okay, so you're only going to pay this much. And you know exactly what you're going to pay over the next 30 years for these Newport towers. And that, for someone like Lefrak, and, you know, obviously a very profitable company, but for any company, that is a significant benefit to be able to say, my taxes, I know what they're going to be, that expense on my income statement is set. And it sort of takes a little bit of the risk off of your, future look. The only other thing I wanted to point out up front before getting into the Fulop policy, because I do want to speak to that, because I've done a little bit of research with that, was just in context of abatements, is transparency. We really need more transparency, I believe, in Jersey City. The reports that Jonathan spoke to, the New Jersey policy perspective, and also, in particular, the New Jersey Comptroller's report in 2010, spoke to this. Abatements are sort of a very opaque topic, and you could argue it's deliberately so because there's really a barrier to entry just to learn about the topic of abatements. There's a lot of technical language that goes into it. You kind of have to do. I've found personally, and I have a financial background. I've had to do a lot of complicated math just to understand the mechanics of how abatements work. So transparency is really, really important. Now, I like to think about transparency on a scale. Okay, at the very leftmost, sort of minimal transparency is what I would call regulatory transparency. That's what like the state and the city and the government requires in terms of what government has to reveal to the people, right? So, for instance, For an abatement to be granted, it has to go through a two votes in the city council. There's certain disclosures that have to be made. That's regulatory transparency. And in my opinion, the regulatory transparency is too low. Okay, there has to be more information, in my opinion, provided to the public. Like for instance, when an abatement comes up to vote. One example is right now there is there's in Jersey City, the city uses something called a fiscal impact statement. It's a very basic cost-benefit analysis to show that what an upcoming abatement's cost is versus the benefit. Okay, and it's a simple sort of mathematical walk. Anyone could probably understand it if they just sat down and looked at it for a few minutes. That's not currently included in the city council agenda. You have to kind of go into the tax office to request it. I actually only found out about it because I've met with Councilman Yunus several times with respect to abatements. That's a good example of how the regulatory transparency, in my opinion, is too low. That should be automatically included in documents made available to the public. Another example is in Jersey City, there's no centralized warehouse of the listing of abatements. You have to kind of go into the city council agendas, each meeting, to see what abatements are coming up. So it makes it more onerous for the public. So if we think about regulatory transparency, and then there's something called good government transparency, and that's basically where a government is very proactive about trying to inform the public. Good government transparency is something that Councilman Yoon and I believe Councilman Navarro are trying to do, which is make items like the fiscal impact statement available as, by default. That's good government transparency. Let's make it less onerous for taxpayers and residents to understand this issue. Let's provide them user-friendly documents so that we can start to break this down. That's good government transparency, and I think, my big sort of takeaway at this point, like a snapshot in time, is that in Jersey City we need more good government transparency, and that's going to require both government and community partnership. Okay, the government can't do it alone, and the community can't do it alone. And I think it's really important for us to support elected officials who are promoting good government transparency, and I've already mentioned two of them, which is Mr. Yoon and Mr. Navarro. Just wanted to get that plug in there for them, because they've been very helpful. Okay, so let's move now to the abatement policy, which is Mayor Fulop's abatement policy. And this was a policy that has two significant sort of updates or sort of features that make it different from prior administration's abatements. And by the way, this abatement policy was adopted by executive order on Christmas Eve in 2013. It did not go through any kind of public discussion. It didn't go through a city council vote. So regulatory transparency, good government transparency. You can start to kind of measure some of these factors on this sliding scale of transparency. And I would argue that executive order on Christmas Eve without any public discussion, that policy is kind of on the lower end of the scale, in my opinion. But there are potentially aspects of the system that, you could argue might be further up the scale. So the two factors that are sort of different or new features is that, number one, the mayor has taken the map of Jersey City, and he's basically created zones. Okay, and depending on where you fall in the zone in the city. So, for instance, one zone is the downtown waterfront. Okay, only up to Marin Boulevard. So Hamilton Park, for instance, and Van Voorst Park is not included in downtown. Okay, so downtown is Zone 1. And Zone 1 is an automatic 5-year abatement. If you're a developer and you want to build in Zone 1, you are automatically entitled to a 5-year abatement. Okay? Zone 2, which is Hamilton Park, Paulus Hook, I'm going to consult my notes here, Harsness Cove, the Heights, most of the West Side. I'm sorry. Yes, no, that's correct. Hamilton Park, Harsness Cove, Van Voorst Park, the Heights, most of the West Side, and Liberty State Park is Zone 2. Okay, and by the way, zone and tier, those are two interchangeable terms, zone and tier. So that's Zone 2, and that's automatic. The default abatement term for that area of the city, those areas, is 10 years. Okay, Zone 3 is Greenville, McGinley Square, and Bergen Lafayette. Okay, and that's 20 years. Automatic, that's your default abatement term if you want to build in those areas. And Tier 4, or Zone 4, is Journal Square, and that is an automatic 30-year abatement. Okay? So so we have this, and then, I'll just mention, but I'm not going to get into this, there's also a tier, or zone 5, and a tier 6, and those are, tier 5 is affordable housing related, and tier 6 is commercial related. But I'm not going to get into those, mostly because I think we're all mostly concerned with sort of residential development, but those tiers are important, and there are likely various, aspects to those. But I'm only going to focus on tiers 1 through 4. So we have this tiered or zone system, and a developer, if they want to build, and I'm going to use the property I mentioned earlier, which is at 9th and Brunswick in Hamilton Park. And if you're looking at a map, and you're looking at Hamilton Park, 9th and Brunswick is sort of northwest of Hamilton Park, and so it's near the 78 extension. So that qualified for a 10-year abatement. Okay, the developer kind of was automatically sort of allowed that under this policy. Now, the other feature of the mayor's abatement policy is the concept of buying up. Now, what does buying up mean? Buying up means that you can purchase additional years of tax abatement by fulfilling a couple criteria, one of 2 criteria, which I'll get into in a minute. So, if you're in Hamilton, if you're a developer and you want to buy that property at you want an abatement at that property at 360 9th and Brunswick, that developer can go from 10 years to 20 years. Okay, he's allowed to do that under this policy. Now, what's required with that? There are 2 things that allow you to buy up. The first thing is you pay 1.5% of your construction costs to a city trust fund. Okay, so basically you're taking the cost of the project and you're taking a percentage of that and you're giving it to the city. Now, in the policy, the city says that it will take those funds, put it into trust, and then those funds will then be used later to fund education, recreation, and community items. So it's this is really meant to be a community give back. Okay, that's the way the policy reads. The other way that you can buy up from 10 years to 20 years is to build a pre-K facility. Okay? Yeah. Is to build a pre-K facility. So those are 2 ways. You can contribute funds, or you can build a pre-K facility. And by the way, if you're in Zone 3, you can buy up to Zone 4. If you're in Zone 1, you can buy up to Zone 2 or Zone 3. So you can purchase an abatement. If you want to build on the waterfront, you can potentially get up to, let me go back here, to 20 years. Yes, 20 years, thank you. You can go to 10 years or 20 years if you're on the waterfront. But you have to pay for it under this policy. Now, when I looked into this policy, there were a couple issues that I found, just in researching a little bit. One was the trust fund, and what I'm about to say I learned at a city council meeting through some Q&A with the city council during the second ordinance reading. The trust fund that is supposed to hold those construction costs doesn't exist yet. It didn't exist at the time that the 360 9th Street abatement was approved. And from an accounting perspective, it's very important that a trust fund actually exists, because if those funds aren't held in trust, then those funds can be used for something other than the original intent. Now, there is this notion of, well, we can trust our city officials, and if we have verbal assurances from the city council that we're going to spend they're going to spend this money, we can maybe say, okay, well, no, I believe they're going to spend that money later in a way that they really intended to. I don't have faith in my government to do that. Just by nature, I think we're a society of written rules and written laws, and if you say that something's in trust, it should be in trust, and it should be in writing. It's kind of like if you were to, give your landlord, the upfront, the balance, security deposit, thank you, Aaron. Your security deposit, those funds go in escrow. Okay, because you're handing over those funds for a year or 2 years maybe. Those funds deserve to earn interest. Your landlord doesn't deserve to spend those funds on anything else. And so they go into an escrow account, and you get a balance. I get a balance every month from the bank saying, here's your money. It's still in this escrow account. It hasn't moved, and this is how much interest you earned. Okay, both the landlord and my husband and I get that statement. So that's important, right? I mean, and if a tenant on a lease should get that, then the city, with respect to these buy-up funds, should get that too. So the fact that this trust fund didn't exist, in my opinion, is a problem. okay? I would like to see that trust fund. I'd like to understand exactly where the funds are going, and I'd like some written assurances as to exactly how the funds are going to be used. The other issue that exists with the policy is that and I researched this, and I asked a lot of different people, and I actually tried to make queries of the mayor's office, but I didn't get a lot. I never heard back, basically. I submitted a list of questions, and then there were a lot of attempts to kind of meet with the mayor personally, and it just never happened. The meeting never happened. The mayor's office never consulted the Board of Education on whether or not building pre-K facilities was a good idea in Jersey City. So when I went and I asked people in the Board of Ed about this, they said, well, that's not really the best use of abatement funds, you know, and there's a lot of complexity to the school side of this, and I realize that that I can't be too much longer, but with respect to the policy, I'll just go through 4 sort of bullets on the issue with this pre-K concept. Number 1, the Jersey City Board of Education has no budget to build schools. Okay, we are not allowed to build our own schools. Part of that is, it's really because we're an Abbott district, but also that's just the way it works in New Jersey. In New Jersey, there's a state-level agency called the Schools Development Authority, and they are responsible for coming in and building schools, and basically doing any major kind of construction, renovation, or updates. That agency is sort of what I would term dysfunctional. It hasn't really performed its job. The funds have been frozen by Christie. That's a whole other topic. But basically, Jersey City doesn't have a budget. They don't have a capital budget. So the notion of the Jersey City Board of Education getting involved in the building of pre-K facilities is sort of a flawed premise. Because number 1, they're not in the business of building facilities, but number 2, they don't have the budget for this. Okay, they can't contribute to this concept financially. Number 2, there's nothing in the policy that caps the rent. So even if the Board of Ed were to entertain this idea or like a project where they funded the building of a pre-K facility, there's nothing that prohibits a developer from turning around and then charging market rate rents on that facility to the Board of Ed. Now, the Board of Ed is probably an ideal tenant for a developer, because if the Board of Ed is not watching its budget, right? Because the Board of Ed, from a developer's point of view, if you can get the Board of Ed into a building and then charge them market rate rents, you've got sort of a guaranteed tenant over 20, 30 years. So there's some problems there, because that means that if, in the Board of Ed, you need to make sure you have people who are really watching that budget, making sure that they're not spending prohibitively high rent. Now, this issue has actually played itself out in the local press with respect to a facility on the west side called the Penrose Project, and there's an affordable housing project over on the west side. It's on Duncan Avenue, just north of Lincoln Park, and the mayor wanted the Board of Education, offered sort of in partnership with the Housing Authority and the Board of Ed, to build a pre-K facility at that affordable housing site. There was never any sort of clear contractual terms other than a PowerPoint presentation that was presented by the developer to define what the terms were of building this pre-K facility. And the pre-K facility, one figure that the developer put forward was that it would be $5 million to finance it. So again, there's the lack of the transparency again is an issue. Okay, there still hasn't been sort of a contract in place. And by the way, the developer pulled out of that deal about 2 hours before the Board of Ed was set to have a public hearing on the topic. So no budget to build schools, no caps on rent, decreased transparency. Again, transparency comes back into this equation. And the reason for that is that if the Board of Ed were to build its own facility, it would be required to go through a very strict procurement process that would be subject to a lot of rules around around transparency and making sure the public understood. With the abatement policy, what we have is sort of an end run around those Board of Ed sort of disclosure rules. So basically, if the Board of Ed is going to build school buildings, it should do it through its own means, not sort of in partnership with the mayor's office, because of this transparency issue. And finally, the other issue I think that exists with the policy is that there's no real focus beyond pre-K. I mean, why do we have a policy that only builds pre-K facilities? What happens when those kids age out of pre-K and go to kindergarten, up through 8th grade, and then through high school? And these are just, so those are the 4 things. No budget to build schools, no cap on rent, decreased transparency, and no focus beyond pre-K. Those are why the build a pre-K facility concept of buying up an abatement is in my opinion, flawed. I know I covered a lot. And
Does anybody have any questions on this abatement issue?
Looked into the legality of the council voting on monies going from an abatement into the trust fund, and then the same council later on voting on where that money's going, whether it's recreation or somewhere else. It kind of borders a payoff of sorts. Anyone look into that legality?
Because this is a great question, and there might be resources out there that can kind of address that. I don't know. I think it's a good question. I think Mia, you might have actually.
Yeah, no, I contacted the state, but unfortunately they have no people left in the division of loan. This is very much like Schundler's recreation fund. So he's trying to hide it through a trust fund. And what happened with that money, it got squandered on ski trips to South America, whitewater rafting. It's absurd. And we lost millions of dollars worth of tax monies until the state put the kibosh on it. But unfortunately, we can't seem to reach anybody at the state right now.
Most people know that I wrote a book about Newark and its community development efforts. And obviously Cory Booker got in the thick of this last year dealing with the Devil's Arena deal. You'll remember that episode. It was really kind of a Telemundo soap opera. And I was going back and forth between Vanderbeek and City Hall. And some of the agreements that they made early on to get the project underway included an agreement to help out with some community recreation money coming directly from the owners of the Devils. And the thought was that, we'll do this as a set-aside fund. Similar to this, to some degree, saying, there were promises made with some of this money in an effort to get, certain reduced costs for taxes and for a lot of the development with the arena project, that they were going to get some kind of money going back towards doing like ice hockey programming and doing all kinds of recreational services. In fact, it didn't come to fruition until years later when they recognized, there has to be a follow-through, this takes place. And that was the kind of the disagreement. So I don't want, you see this in a lot of cities. There was all this talk also in Hoboken that they were going to do this as well in terms of making some agreements with developers, so they were going to help out with recreation and park services. Developers love to kind of enter into these kind of agreements. The problem is, does it really have teeth? Are the developers in fact going to come through? What are the legal attachments to it? The problem is that in a lot of these cities, and I know I hate picking on New Jersey because New Jersey seems to do a lot of this, but okay. The problem is that it does not have the backing, the legal authority, and so unless it really has that, it's pretty loose. It's pretty loose.
But then, what are the impact on these corporations once the abatements are over? They just go over to paying property taxes, and how do they affect respective renters, tenants?
It's a good question. I mean, I assume what basically happens is they transition into dimensional taxpayers. It's a really good question because I think it would be an interesting analysis to see the impact. To, for instance, one of the Newport buildings, what happens to their profit margin when they convert to conventional taxes? Does their profit margin decrease? And if so, does that then mean that they increase the rents?
I can also add to that. We met with Bob Kakolewski last week, and I asked him exactly that question. What's going to happen when these projects convert, and what's the impact on revenues going to be? And his answer was, it's a really good question. Unfortunately, we don't have the financial manpower to analyze a lot of this. He said he is, I'm just giving you the party line right now. This is something that he claims to be very interested in, and he is trying to staff up right now with more financial firepower, more CPAs and analysts to figure this stuff out. But they don't have the answer to that right now.
Can I just make a comment about that? Because my understanding of what an abatement was, I learned something in the past year, and I don't think it's that complicated. A pilot is set up, if you have a 10-year pilot, what you're really saying is, okay, in the first couple of years, you're paying 25% of what you'd normally pay. In the next few years, you're going to pay 50%, 75%. So by the 9th year, you're paying 75% of your tax bill. And then after 10 years, now you're paying 100%. So it goes up in those steps. If it's 20 years, they do the same thing, but they do it 5 years, 10 years, 15 years, 20 years. So if you're a building owner, you're slowly approaching what you're going to have to pay anyways. So I think you're going to kind of have a good sense of what you're going to pay.
That's not.
Yeah, I think it may be confusing now.
That's 5 years.
I'm getting from our former corporation counsel, that that's not necessarily how it works. So we should probably clarify that. Maybe Brigid, I don't know if you have.
Well, that's how a 5-year abatement works. It's that step up, and then by the 6th year, you're paying your conventional taxes. Part of the problem with abatements is that every abatement contract is different. So it's different. That increases the lack of transparency. I don't know if we can even answer how everyone is different.
Standard.
There's no standard.
I don't think common law is that. I think
Talk louder.
The 5 years aren't necessarily.
yeah.
I would agree. I don't think they're necessarily stepped. It's a contract. An abatement is a contract, and the developer enters into that contract with the city, and it's terms. It's like any contract you'd enter into, as a personal person.
Which is why I was trying to reinforce, at least in my research, was that there's got to be at least a set of criteria, at least some kind of consistency if that's possible. And of course, again, the reports indicate that as well. And I don't want to just pick on Jersey City. A lot of cities have the same problem with the tax abatements.
Could I just...
Sorry. Yes.
Is anyone currently monitoring when these expire to make sure we're collecting the right taxes? I know it wasn't happening. Is it happening now?
So,
do we know?
Another great question. As Mia alluded to earlier, the state has sort of been gutted in terms of, so there's really very little monitoring. And the New Jersey comptroller...
but the city has no one monitoring that?
Not
They
really.
did. They did. He retired. They found out that he didn't do his job, and we lost millions of dollars.
Who did it?
Steve. Yeah, absolutely.
I would
So
say
they went
it's
back
probably
7
true.
years.
I would say there was an audit that was begun toward, I guess it was in early 2009, the former business manager, Kelly. I mean, some of the results of that came in early into the new administration. I think that has just indicated that it should be more robust. There was an employee of the city, who I won't comment on their performance, but who was doing it as part of their job.
That
right?
was their job. He had a 2-person staff.
So, but I think there's somebody. There's been some outside
It went under the
contracts given.
No, it was under the tax collector's realm, and they were able to collect $25 million. So that's why Fulop's got a lot of money right now.
If I could just comment on this, because I actually have recently looked into this question, and I'm actually hopefully publishing an article I'm hoping for Monday, that deals with this. So what I recently learned is that the city, let me just explain that when the city computes the cost of an abatement, okay, and just let's step back and just think about abatements in general, a building, all right? What is it? An abatement's cost is driven by the number of people who will live in the building and by the number of public school students who will go to school in that building, okay? So residents and public school students. Those numbers, they're basically demographic estimates, okay? If you think about Jersey City in the early 1990s, there were fewer people coming here, because you had probably more single people coming and working in the city, versus now. Now you have probably more families. Our population, according to census data as a city, has grown by 11% from the early 1990s until 2012, I believe it is. So we've been growing, and we've been becoming more of a destination city for families who want to stay. And also, in the late 90s, free pre-K came to Jersey City. So there's an economic incentive to stay in Jersey City if you're a parent, at least through pre-K 4, because if you move outside the city, you have to pay for pre-K. You have to pay for private preschool. So students and residents, that number drives the cost of an abatement. What I recently learned is that the city has been using estimates from the early 1990s to cost abatements in 2014. So that basically means that developers have been getting discounts on their abatements. They've been paying 1990s rates for abatements in 2014. So that means that it's kind of complicated, but basically it's not complicated in the sense that conceptually, but I'll just walk through it quickly. Their profit margin is very high right now, okay? Because they're able to charge 2014 rates. A developer in 2014, up in Newport, for instance, Lefrak is charging much higher rates for a 1-bedroom panel than he was in early 1990s. So this is a problem because this reveals a lot about the city's lack of oversight. And I will say right now, it's no one person, it's no one politician, it's no one, you know, this is why the community really needs to become educated on this issue, because the fact that the city's been using early 1990s demographics shows a lapse of oversight, quite frankly.
And this also partly explains why the state was so involved and so invested in on something like this, was that, you know, who exactly is monitoring, who's controlling, and what number of data are they using? The problem is there's no real consistency. And again, I don't want to, like you said, you want to point fingers, because each administration, they all deal with it differently, and again, I don't really see any continuity in terms of what formulas we're using. That's kind of the interesting quirk in all this. Even if you go back to the Schindler days, there were problems then too. So it would be nice to see some uniformity through each administration, and let's face it, we do go through a lot of mayors in the city, so and certainly administrations and directors and God knows council members. So, you know, to be consistent, it would be nice to see at least some kind of continuity in terms of formulas, data, and criteria. That's even plausible.
Yeah. Since you guys have brought up the impact on education, I wondered if you could explain the relationship between abatements and adjustment aid from the state.
You know, I hesitate to speak to that because I don't fully, it's like a whole other ball of wax. My understanding is that adjustment...
Could you repeat the question?
Oh, I'm sorry, yeah. So the relation, are you familiar with adjustment?
A little
aid?
bit, yeah.
Okay, why don't you address this? Because
So that's just more or less, you're speaking back towards state aid is coming in.
Well, state aid comes in multiple categories,
Right.
So I'm speaking specifically of the $114 million in adjustment aid from the state.
And again, that depends on the municipality. It oftentimes depends, even just in Jersey City, but sometimes you don't see the same amount of money coming through every year for the budget. So the problem is that depends on, it's oftentimes political. I mean, you saw this certainly with the Christie administration, where some, don't want to just use Jersey City, but even in Newark, you see other cities where it's not going to be a consistent amount of aid every year.
Well,
but a lot of that's political.
And that's why I was interested to hear what your guys' understanding is, that Newark, for instance, doesn't get that amount of adjustment aid because the adjustment aid is calculated based on the loss of property taxes from abatements.
Could you hold that thought for a second?
Issue of the relationship between the schools, because I think that's also another way, in fact, that presently the city is getting its money twice. You get your pilot to the city, to whatever, or wherever it goes, maybe they're even getting it 3 times if you're getting your trust fund that's not a trust fund. But then you get your adjustment aid, which is from the state to the school district. Initially, if there was no adjustment aid from the state, there would be a total net loss in revenue to the school system. But there isn't, because the state pays in what Jersey City should be paying but doesn't pay. The state pays. So I just was interested in how you guys had thought about if there are dangers of that, if it means that the city is balancing its budget based on the state.
Okay, so I want to preface what I'm about to say with this, that we really need an informed town hall from the Board of Education on how their financing works, okay? That's really, again, it goes to the puzzle pieces kind of fitting together. The Board of Education is a huge stakeholder, and one of the things in the comptroller's report that he pointed out is that school districts are a major stakeholder that are not invited to the table in negotiating abatements. So I'm going to speak to your question just kind of from my perspective in what I do know about this. So I first became involved, like sort of the catalyst for me starting to really write about abatements was learning about the Journal Square abatement. That was the first notable abatement approved under the Fulop administration. And I learned that there was no, that the abatement funding would not be directly allocated into the school system. So when Mayor Fulop was running for office to become mayor, that was one of his campaign promises, was abatements need to help fund the school system, and I'm going to take abatement funding and I'm going to create a, and there was language in his platform that was like a allocated specific account from the abatement into the school system. And when I learned that with the Journal Square abatement that didn't happen, that's really when I started paying attention to abatements, because I thought, well, if he's not keeping that campaign promise, what does that mean for support of the schools? So, and I actually had I had a conversation with a couple city officials, and that exact point was brought up. If you take abatement funding and you put some of that into local city coffers, the state aid might go down. And it's good for in my opinion, it strikes me, and again, totally personal opinion, the morally right thing to do is to help fund your own school system and not sort of hide your wealth from the state, because that's kind of what an abatement is. You're hiding your taxable wealth from the state. So my parents, who are retirees in Florham Park, on a fixed income, are going to be subsidizing the education of sort of abated buildings in downtown Jersey City. Morally, I'm not okay with that. I don't think that's right. I think if you live in a piloted building, which I lived in Newport when we owned a condo there, you should be helping to pay for the school system. I just think it's a public good. We have a public interest in educating all of our school children, and why are we kind of monkeying around with the fiscal sort of, realities of that? That's my own personal sort of, as a parent.
Well, I can just add, at least the messy part of all this, I think we all know this in service of the fact that you have a lot of people invested in public education here in New Jersey, and it's not just a city responsibility so much of a county, it's certainly a state one. And in a lot of these cities, as you said, Abbott District, they're getting a lot of that state funding. And so you have these shifts in numbers that are just not consistent, and it's very difficult. And this obviously is the main factor of why New Jersey we pay the highest property taxes in the nation. A lot of it is going not directly to our local schools, but it's helping out maybe another school district, especially, as you said, out of the suburbs. So a lot of that state aid is coming back in. It's going to be changing it around. Of course, the unfortunate thing I was going to bring up earlier was that you saw this clearly in Newark, where it can be very political. And depending on who's governor, depending on who the directors are, they can certainly find ways of changing around the budget. Yet it does go back to that abatement policy as well, in terms of where that money's coming from directly, what the impact would be of that.
Guys, I think we have to wrap it up.
I think there was a question. There was another question.
Oh, I'm
Bill, did you?
Bill, can
Do you want to?
Possibly.
Yeah, please. Last question.
One last question?
No, that's it. All right, I'll just say, well, first, the disclosure again that I worked for the city for nearly 9 years, and I've actually talked on abatements at continuing legal education things. First, great job. I thought it was really good. It's so impressive that people who are like not working for developers or government have this much knowledge. Very helpful. I just wanted to say a few things. Now that I'm not afraid of being audited by Matt Boxer, I will say that I found his report to be poor, and most notably, I found that the biggest deficiency being he didn't take the time to talk to one city official or to one developer. So I found it odd that he would feel qualified to opine on abatements without doing that. I think the big question when it comes to abatements is it's really this: is the but-for analysis really there, right? Like, but for the pilot, will this development occur or not? And talking to Mark Pfeiffer outside, it's like the developers come to the table with more ability, more knowledge than you guys do, the city people, and it's true, right? They're the only ones who will know. But in my opinion, if the but-for analysis, you're going to err on the side of, I think, the city who wants to see development, you're going to say, well, if this is going to make this building occur where there's a vacant lot, and it's going to bring people to go on Kennedy Boulevard or Newark Avenue, whatever, and more money than we would otherwise get, because all that pilot revenue is money that you would get nothing or something very minimal. Last thing I'll say is on the education side, we have to look at pilots. Okay, this is a state statute. The policy's been set by the legislature. Okay, that's where the policy is. We're supposed to be implementing it. We can modify it. You're supposed to be implementing the policy. And the state legislature, which also said that we should fund Abbott District schools, because we've had an enormous decline in our cities. We've had a lot of poor people in our cities, still in Jersey City. And I hope and think that it's appropriate for the wealthier areas of the state. I think it's in their best interest to continue to fund our cities. But I think that that's the biggest issue of the day is, what's the appropriate portion of that money that we should be putting toward the schools, especially now that there's been a threat out there looming, and that the state's going to stop funding us, at least to the robust levels that they have to
Jersey City, other cities.
Not just Jersey City, all the
cities.
Can I just make one quick sort of point on top of that? I think two things. I'd love to see an analysis from the city that justifies that but-for analysis, because we don't have that right now. So that's the one thing I'd say in response to that. I agree with you. And the New Jersey policy perspective, they did a comparison of the sugar house pilot between conventional taxes and the pilot payments. And one thing they omitted, to your point, is it could have been zero, because a developer could have not renovated the sugar house, which, by the way, is in Paulso. It's a beautiful building.
For millions of dollars.
I think it's a legitimate point, but I think the city owes taxpayers a justifiable analysis of the pilot itself, because in my research and also kind of the sense I get, so I don't have any data to really to justify this, but this is my sense, is that tax abatements are being used as sort of market tools, not really as tax policy tools. We've kind of gotten into that realm. The other thing I just wanted to say was that the state aid is going down. So a couple years ago it was at 75%. I think the upcoming year it's at 65%. So the state aid, we are seeing it actually go down.
And let me add to this too. I think the important thing is that when it comes to land remediation, it's certainly cleaning up a lot of the land that has been problematic in terms of industry and manufacturing that once existed. It's been tremendous, at least for a lot of developers, to take this on as an initiative, and hence part of the reason for the tax abatement. It does help out that effort. What Bill brought up here, I think, is a good point, is the fact that when we're dealing with a lot of these laws, it is on the state books, obviously, and the NJSA and New Jersey State, annotated statutes here. They're referring to at least NJSA 40A21-1, which is the 5-year exemption abatement. If you're also interested in long-term one, is NJSA 40A20-1 as well. If you look at that within the state statutes here, it's quite amazing to see kind of the language. And it would be good to at least reinvestigate this at the state level and the impact of it at the local level. But there's got to be some communication between all these levels of government. And I don't want to exclude the county government in all this, because obviously they're very critical in working with the cities and dealing with education financing, let alone property taxes. So I don't want to exclude the county too. But there's got to be some kind of consistency even with the levels of government. And unfortunately, Billy, you brought that up. Part of it is just a lack of communication, or just a direct connection. And we're still only seeing that, as you all raised here, with even the school board. I mean, are they aware of some of this too? It's important that there's some kind of dialogue and communication taking place between our government officials and even the developers as well, and what we're getting into. But as taxpayers, we should be concerned as well. And I'm kind of surprised that we're not seeing more of a response to this, especially with our property taxes increasing. I mean, quite frankly, I'm getting a little bit binged at it, living in Paul's Hook, right next to, actually right there to the Sugar House. So you haven't had to wonder, just as a taxpayer, okay, what's the impact on this for everybody else in our own neighborhoods?
Can't thank you guys enough for coming out. You stuck around to the bitter end. It was longer than we had planned, but I think there was an amazing amount of really, detailed, thoughtful discussion. The presenters were just wonderful. I hope that we can do this again. We saw a tax forum, a budget forum that was really special. And I hope you get the word out that there's a core group of people, amongst yourselves included, that are getting up to speed on these really thorny issues. So thanks so much for coming out.